In a world where the dollar once was the supreme currency, a new global leader has emerged, and it's shaking the very foundations of the financial world. The king dollar, long considered unshakable, now stands at the end of its dominance. Who is the force behind this shift, and what can the US do to stop this shift? How will the US fight this huge challenge to its economy? Let's find out. After China emerged as a global leader, the world has witnessed significant shifts in the global financial landscape, and the dominance of the US dollar is facing challenges. These are the challenges no one expected the king dollar to face, but here we are. The dollar is on the edge of falling off the cliff of its dominance. This is happening because of China. China has been de-dollarizationing already, but the game has taken a twist when more countries are joining to end the dollar dominance. De-dollarization refers to countries reducing reliance on the US dollar as a reserve currency, medium of exchange, or as a unit of account. China had been actively working to promote its own currency, the renminbi, RMB, as an international reserve currency, and reduce its reliance on the US dollar in international trade and finance. Now that things have gotten even more serious, because after China, more nations are willing to challenge the US dollar dominance. There is nothing the United States can do about it except to try and fake things in order to maintain its dominance. As of September 15, 2023, the United States will have no choice. There's some interesting news about the way the US Federal Reserve might handle interest rates in the future. People who watch the financial markets closely are starting to think that in June 2024, the Federal Reserve might decide to lower interest rates at the same time. The chance of them raising interest rates at their meeting in September has dropped to less than 10%. This change in how they might deal with interest rates has caused some pretty big ripples in the financial world. One important result of this is that the interest rates in the US Treasury bonds, which are like loans that people and organizations give to the US government, have gone up. The rate has reached 4.082%, the highest in almost 9 months. This means that if you're someone who invests in these bonds, you might get a bit more return on your investment, but it can also affect other things in the economy. For more people willing to buy the treasuries, they will have to pay more. This made the US treasuries look less attractive. Everyone knows that interest rates are increased by the US government to manipulate investors, so the smart investors are selling it. The sustained selling of the US treasuries has led to a notable development. The US Treasury auctioned $23 billion in 30-year notes, witnessing the lowest demand since July 2011. This trend signifies growing uncertainty in the US debt market. Historically, whenever the Federal Reserve hints at policies or signs of a potential US recession and debt crisis emerge, safe haven assets such as gold gain prominence as alternatives to the US dollar. This is a trend that is gaining momentum on the global stage. US dollar, the world's favorite magical paper. It's true that the dollar isn't backed by a tangible asset like gold. Instead, it's like the world's most extravagant game of Monopoly. The US can print money whenever it wants, and we all just hope they don't go on a wild shopping spree at the dollar store. Investors are in a constant game of hide and seek, hoping their dollars don't disappear faster than socks in a dryer. But hey, as long as the US keeps the economic magic show going, we'll all keep playing along. It's like the US has this make-your-own-money machine in the basement. They can just crank up the printing press whenever they feel like it. And when they raise interest rates, it's like the US Treasury is trying to play hard to get. Come on, investors, we've got the best rates in town. Give us some love. But it seems like investors are looking at the dollar with a skeptical eye, like it's that suspicious street magician who keeps pulling the same rabbit out of the same hat. It's a real comedy show in the world of finance, where trust in the dollar feels like believing in a magic trick that's been overplayed. Analyst Zoltan Pozsar has pointed out that the world is currently undergoing a process of monetary separation from the dominance of the US dollar. The dollar is facing increasing pressure, and central banks around the world are exploring alternatives. The US's interest rate increasing tactics, which have long supported the US dollar status as the global reserve currency, are showing signs of decline. Oil-producing nations led by Saudi Arabia are already taking steps towards de-dollarization in oil transactions. Well, it looks like the oil-producing nations are tired of playing monopoly with the dollar, and they're ready to mix things up. Saudi Arabia and the gang are like, why use the dollar when we can trade oil with gold-backed digital bling-bling? Countries such as Saudi Arabia, Iran, Iraq, and the UAE are exploring the possibility of gold-backed digital currencies for cross-border settlements. Some of these countries are also a part of BRICS, and in this group, they have also made a BRICS country that is backed by the US dollar. The oil-exporting nations, often constrained by the dollar, innovate their foreign exchange strategies. They are considering issuing digital currencies as alternatives to the dollar. The oil-rich countries are the leaders of trade, and what currency they pick to trade matters a lot on a global scale. Iran, a key player in the global oil market, has announced plans to issue a digital gold coin named Payment, backed by physical gold. This initiative is aimed at facilitating cross-border transaction payments, potentially accepted by central banks worldwide. By October of this year, digital currency contracts are expected to see widespread adoption in various industries, including the oil sector. This signifies a significant shift away from traditional currency-based transactions. China, the world's largest gold producer and consumer, has been consistently increasing its gold reserves. This trend suggests a move towards using gold as a component of its de-dollarization strategy. China's growing presence in the global economy is being reflected in its increasing use of the yuan in oil transactions. The settlement currency for China's purchase of Iranian oil is often the yuan or the euro. While China has been a huge concern of the US dollar hegemony, there are other nations also joining that were never expected. Japan, traditionally a strong ally of the United States, is actively pursuing de-dollarization as well. It is in negotiations with Iran's major banks to use digital currencies for energy trade settlements and is exploring ways to circumvent the dollar. The US's closest allies don't trust the dollar any longer due to these new changes. The world knows everything about the dollar. They know how unstable it is and what future it holds. So everyone is avoiding the dollar and moving toward other currencies. Russia is also making significant moves towards de-dollarization. They aim to link gold with oil and have launched the oil-gold settlement system. Russia's largest bank, Sber, has issued digital financial assets backed by gold as an alternative to the petrodollar. Central banks worldwide are increasing their gold reserves at the fastest pace since distancing themselves from the US dollar. The accumulation of gold in various countries can be seen as a strategic move to reduce reliance on the dollar. The global financial landscape is undergoing a profound transformation, with gold-backed digital currencies emerging as potential alternatives to the US dollar. As central banks diversify their reserves and explore new settlement methods, the dollar's dominance seems very close to its end. Whether these trends will lead to a new international monetary system, anchored in gold or digital gold currencies, is still a question. However, one thing is clear. The era of the dollar's unchallenged supremacy is changing, and nations are actively seeking alternatives for the goal of financial stability. Nations are like, "Dollar, you had your time to shine, but it's time for a new financial era." They're scouting for alternatives as if they're browsing a buffet of currencies, looking for the one with just the right flavor of financial stability. It's all part of the ever-evolving currency comedy where even the dollar might need to update its wardrobe to stay in style. But let's not forget that China took a significant step by leading the way in de-dollarization efforts. This not only benefited China but also had a positive impact on other nations across the globe. It's fair to say that these nations owe gratitude to China for its proactive role in this process. China's initiation of de-dollarization was a strategic move that had far-reaching consequences by reducing its reliance on the US dollar and international transactions and trade. China demonstrated its commitment to promoting a more balanced and multipolar global financial system. The importance of this initiative extends beyond China's borders. Nations, especially those that have faced challenges related to the dominance of the US dollar, found inspiration and practical solutions in China's actions. These countries too began exploring alternatives to the dollar, such as gold-backed digital currencies, and sought to diversify their foreign exchange reserves. China's de-dollarization initiatives are not only implemented by the central government in Beijing. Some of the initiatives have also been carried out by local governments and local financial institutions. One example is the Sino-Russian Financial Alliance. China's dedication to de-dollarization paved the way for other nations to pursue a more independent and resilient financial future. This shift away from the US dollar as the dominant global currency has not only enhanced economic stability, but also reduce its vulnerability to external economic pressures. As a result, the global financial landscape is gradually becoming more balanced, with multiple currencies gaining importance in international trade and finance. Nations that once felt constrained by the dollar's dominance are now finding greater flexibility and security in a world where they can rely on a variety of currencies, thanks in part to China's pioneering efforts.